Awesome. So yeah, thank you so much, first of all, for being here, Unchained Summit. I know it's a lot of stuff happening this week in Dubai with a lot of different conferences. So really appreciate all of you guys being here and spending this 45 minutes or 50 minutes effectively with us here on stage, talking a little bit more about the investor perspective. And I have a lot of awesome faces here, some old and new friends that have been active in the space for a long time, invested in great companies, supported great companies. So I think before we dive into the topic, I'd love to give each one of you a little bit of time to introduce yourself, talk a little about the fund, the investment thesis, and just how long you guys are in Dubai. Maybe we're gonna start off with this perfect order. Let's start with Sam in the middle to disrupt that order.
Hey guys, thanks for everyone to showing up here. My name is Sam. I'm executive Green Holdings. We're a crypto fund started in 2017-18. Currently based out of the US, but one of those active in the VC space. We also run a fund of funds and a liquid fund as well. But my and our primary focus is early stage venture from pre-seed investment all the way up to Series B.
Awesome, yeah, you guys are the OGs in the space. And then maybe let's kick it off with Jack.
Sure, thanks for having me. So my name is Jack Platts. I'm a co-founder, managing partner of Hypersphere Ventures. So Hypersphere I started in 2020. We have a liquid fund and a venture fund as well. And we invest from seed through Series A and Series B in anything crypto related, typically tokens, but we've also done crypto equities recently. And really our thesis is work with founders closely, high conviction, and kind of, my background is I was early at Polkadot, so I was there 3 years prior to starting Hypersphere. So kind of an operator mindset with helping ecosystems start and flourish.
Amazing. And taking...
Hey guys, I'm Tekin. I'm the founder of a crypto investment firm called DAO5. Our bread and butter is early stage venture in new companies and new protocols. Usually we focus on where we see the most technical innovation, really strong kind of communities, and very founder oriented when we invest. But we really do everything in the whole gamut from liquid token trading to TVL provisioning, lending. Excited to be here and share a little bit more about us and our thesis in the space. And my background personally, before starting DAO5 in 2022, I was a general partner at Unchained Capital in the early days.
Amazing. Yeah, so a lot of awesome profiles here. Thank you so much for being here and spending this time with us. Myself, I'm Tobias. I run TBV with my co-founder Brent, and we invest typically up to $2 million in venture funds. It's a relatively new fund. We've done about 10 investments now, which we're excited about, and hope to find some more interesting companies during this week here in Dubai. I think before we jump into the topic that's more around the whole evolving landscape of Web3 with trends coming and going, as we're here in Dubai in the UAE, and I think a lot of companies are moving here, different regulatory frameworks are being put up, and obviously the whole conversation will go a little bit into the idea of the institutional side of investing as well as the space in itself. I'd love to have your guys' take, as I don't think you guys are based in Dubai, right?
I am.
You are based? Perfect. So we have some expert here. So I'd love to understand, for some of you guys who are not based in Dubai, based in Asia, based in the US, probably have done deals around the world, what does fascinate you? Where you see the journey of crypto going for the UAE in this area specifically? And then maybe, Tekin, I would love to get your take as sort of, being locally right here. And I just got my Emirates ID, so I'll be moving here. So I'd love to get your takes on this. Yeah. Thank you. Of really just understand the outside and the inside perspective of the UAE market.
Sure. So I will caveat in saying I'm not an expert on the UAE market and kind of what the institutional outlook is here. I have met with a number of investors and both kind of public and private wealth here. And I'm continually impressed by how proactive and forward-looking the UAE is in embracing kind of emergent technologies like crypto and AI. I think when you go to other parts of the world, particularly the West, there's a little bit more of kind of risk aversion in the present environment. And I think the UAE has a particularly entrepreneurial mindset that's super exciting. And whatever company in crypto you're starting, I strongly advocate for living here and structuring here because it's very logical and pro-business.
Amazing. And how long have you sort of been in the UAE now?
I moved here 9 months ago.
Oh, so you're also very
fresh. Yes.
Amazing. But yeah.
Actually from the Bahamas, where Jack is living as well.
Oh, you're in the Bahamas.
Yeah, I'm in the Bahamas like 5 months a year, 4 months a year.
Amazing. You'll talk about this at some point as well. I'm very interested in the Bahamas in itself. But Sam, your outside perspective, I mean, you guys invest in a lot of different companies across the globe. Where do you see the narrative with the UAE going?
Yeah, so obviously there's a very strong growing concentration of capital in the UAE. And so I think that particularly is a big draw for a lot of founders. What we've seen is that a lot of our portfolio company founders are actually moving here for various different reasons, for tax reasons, but also, like I said, there's very strong entrepreneurial support kind of system growing in this space. And there's a lot of government kind of support from everything from subsidies to grants and whatnot that are really trying to help push entrepreneurial initiatives here. And I think that will only continue to grow going forward. So, I think our customers try to spend some more time in the year and the Middle East as well.
How about you?
Yeah, for us it's important to have a presence. We have a partner here on the ground, Mehdi, and so he helps us make sure that there's really from a deal flow perspective, I'm originally American, so definitely more European and North American based in terms of our deal flow, but we see there's different types of alpha, there's different types of information, and there's different types of founders that are more popular in Dubai. And maybe if you're based in New York, you wouldn't actually hear about them right away. So I think there's a different way of looking at investing, and there's even different projects, and that's why we found it important to hire locally here.
Makes sense. I mean, I think in crypto it's still very difficult to say there's a regional focus in a sense, right? Because I mean, sure, a company might be incorporated somewhere, but it's not really, or in most of the cases, at least from my experience, is not that the whole team, we're all a Dubai company, everybody is in Dubai, and our focus is MENA, right? You don't really have these types of structures most of the time. It's mostly we are a UAE company, but our founder is in New York, the other one is in Singapore, and we are focusing more on the Asian market, right? So it's a little bit more, I would say intransparent, but I think for a lot of founders it's a challenge to where to effectively go now, right? With the US, especially for you guys, right? It's with Trump being there, with all the directions moving towards potentially a more crypto-oriented future, but founders are still very insecure of where to go, and I think that's where the UAE or whole MENA effectively is trying to make a space for people to come to and set up regulatory entities in order to at least launch and operate in a structured way so they don't have any surprises coming up. So do you guys see overall, and you don't have to do it one by one, but do you guys see overall more and more companies incorporating in your portfolio? Has that been a big push for the region, or is it you don't really see that right now? Is that something you would advise on potentially?
Yeah, like I said, I'm seeing a lot of our portfolio company founders incorporated here and do here. I think there's a growing kind of network effect, again, with all the kind of infrastructure and support that exists and it's growing, that as more and more founders come here and as more and more capital comes here and investments happen, there's not many other great other options there than I think the UAE. But I think this is probably the best time it has been in crypto from a regulatory perspective. I think there's so many different regions that are vying for talent and trying to grow their own crypto hubs, because I think every kind of government sees the growth potential there. And so, as you mentioned, the US and New York is obviously a massively growing hub. UAE and MENA, also Europe, I think is starting to become much more supportive, and we're also seeing founders kind of stay or to move to Europe. So, despite being an online and remote first kind of industry, I think as we get more of these concentrated hubs, it will really help to, again, grow the network effects and accelerate some of these potential partnerships and collaborations across spaces. That's so important when we're all building, essentially building blocks and just growing businesses.
Yeah, I think at this point, the UAE hasn't exactly cracked startup culture yet. Although if you're up and running as a business, there's huge incentives to move your team here, and it's very supportive of that. I actually used to live in SF many years ago, and people often speculate or share opinions on why SF is such a hub for startups. And one of the reasons that doesn't come up quite as much is it's just like not that exciting of a place. And I think the lack of distractions is actually one of the most powerful things in creating kind of like a social culture that overlaps with startup culture. That is a challenge for Dubai and the UAE. Is it's just, frankly, there's a lot to do. So, so far it's really infiltrated in terms of like big companies moving here. I might be wrong about this, but I don't believe like Polygon was founded here, but it did ultimately end up here. Same is true of Binance to some extent. But to crack startup culture, I think it'll take some more time.
Yeah, I was just in San Francisco actually. I mean, I'm not really usually there. I'm in Singapore for the past 5 years, but it is a different energy. And everybody who says SF is dead, I mean, maybe, but like when I was there for about a couple of days, but you just feel the startup energy. Like everybody's building, trying to do something, which is still lacking here, right? I mean, I don't think you have as much like fundamentally solid people in this part of the world yet. That maybe change with all the incentives that's happening, but like compared to SF, compared to some of the other places, even Singapore, it's a different dynamic of people. Rather, it's not really like money and outcome focused. It's more like building focus, right? How can we do something that's lasting and scalable? Now, as we covered sort of a little bit the UAE, at least as best to our knowledge, I'd love to go a bit more into the institutional adoption piece of crypto, right? Everybody's talking about it. Institutional adoption is coming, and obviously, yes, we had ETFs launching and bigger organizations getting involved, but what does institutional adoption mean to you guys, and where do you guys think we are in the journey of getting to institutional adoption of crypto? And yeah, maybe you can start.
So institutional adoption is is obviously really key. I think probably part of the next couple years. We've seen it in the kind of token market in that there's a lot more what are called real-world asset launchpads or layer ones or services. Started with very simply stablecoins. They're a real-world asset, digital representation of a US dollar. Typically 99% are US dollars, but we've seen that grow to include mortgages and even people working on things that are so real-world as to be like uranium or things like this, like rare earths. So I could see more and more adoption from the likes of Van Eck and BlackRock, not just with the ETF offerings for Bitcoin, Ethereum, and now Solana and others, but in that vein with the real world asset adoption. And then another area that we were excited about this past week, we just made our largest investment into a project called 21, and it was backed by Tether, SoftBank, which SoftBank is the largest asset manager in Japan for funding things like WeWork or private companies and high-tech companies. So they'd never touched crypto before until last week, right? When they put $1 billion next to Tether, who put in $2 billion into a project called 21. And so we were excited to back that. And it's a MicroStrategy competitor in the sense that it's a Bitcoin acquisition vehicle. So the previous panelists and speaker were talking about earning Bitcoin yield. And earning Bitcoin yield is like the holy grail, right? Because we all already agree Bitcoin's the highest growing asset over 1, 3, 5, 10-year period in terms of price appreciation. So what's better than that? Well, it's also getting yields on the Bitcoin. So there's a whole, on the venture side of the business, we've looked at a lot of DeFi protocols focused on getting Bitcoin yields in a trustless way, maybe on a Bitcoin L2 or on Ethereum that's bridged over. And then also in terms of other funds, there's Bitcoin denominated share classes where people are investing Bitcoin and they expect a Bitcoin yield. And the GP or manager is getting paid 2 and 20, not on dollar appreciation, but on Bitcoin yields. So what Tether's really doing with this is they're taking about 15% of their treasury, putting into this vehicle 21 capital, and the idea is that they increase their Bitcoin per share. So they're going to be getting Bitcoin yields by issuing debt to acquire more Bitcoin at advantageous times. So I think things like that are highly scalable, that are Bitcoin accretive, are interesting, and it also allows institutions like SoftBank to get involved.
Very interesting. And at what trajectory is this happening? Like, is this in the very, very early stages, or do you see this becoming like big upwind in the next couple of months?
So I think the momentum has started, and Big Brain also invested in Upexi, so maybe you could speak to the Solana acquisition vehicle and your thesis there. But we've seen in the past month 2 Solana-specific acquisition vehicles, Janover and Upexi, launch. And then with Bitcoin, there really wasn't a second best next to MicroStrategy. There are some Bitcoin-related mining companies that are public, some Bitcoin-related financial services companies that are public in different stock exchanges like Galaxy, but really a competitor to MicroStrategy we hadn't seen, so that's what made us so excited to back it.
Amazing. Thank you, Jack. Sam, I'd love to get your take on this as well.
Yeah, so I think when Ethereum and DeFi really first emerged, this vision about all the finance on-chain rails, it was very easy to see. You have these archaic legacy systems and infrastructure that is 50, maybe even 100 years old for some aspects. They're very inefficient. And I think everyone in this room probably is born into that vision as well. And in that sense, I think we're in the early innings of, really whether through the applied, I think, S-curve to the broader kind of financial adoption of crypto. We're at that kind of beginning of the inflection point. See, that's going about stablecoins, but I think there's really other interesting aspects as well, like Robinhood just announced tokenized spot assets. I think they'll start to use crypto perpetuals as well. And I think ultimately these are just kind of like early signs of some of the ways that institutions and existing financial service companies use crypto as a way to make their products and systems significantly more efficient. I think if we look back in 5, 10 years time, we'll look at some of the products and adoption that's happening now, and it'll feel like really toys and early kind of just concepts. I think there's still so much more that we can do, and those things are happening. But unfortunately, finance as an industry and government just moves incredibly slowly, and to adopt such a rapidly disruptive technology can take time. But we're finally there in some of the first few innings, and the government is finally actually starting to become much more supportive and active. And so yeah, I'm super excited about what's to come. But really the end goal and the end vision is all of finance launching. And I think that also takes some time, but I'm very confident with it.
Do you think now is that kind of breaking point where like institutionals have enough confidence to look at it from a use case perspective?
Yeah. I think we're there now, and now it's looking at it, a lot of companies like Mastercard, Visa, already start to put up like pilot programs and speed policy, et cetera. But I think it's access to some, like JP Morgan already has their own enterprise private chain, blockchain. They actually have billions, if not trillions of volume annually on their own chain, right? But that's the private chain, and obviously it's people in crypto, we rely with that, the ideal of something like that. But I think as they get more comfortable and as the technology is getting better as it is, we're going to start seeing massive movements.
Very, very interesting. Second, do you agree with that? Do you have a different opinion or maybe different examples?
Yeah, I largely agree with what both Jack and Sam said. I think specifically the moment everything flipped in terms of like the market's perception of this is the era for institutional adoption was when Trump got elected in November. Like most of crypto's history, institutional adoption has largely been a meme. And even in the 2017 cycle, you had this kind of like competition between ICOs and tokenization versus the R3 Cordas and Hyperledgers of the world. And it's not that those were fundamentally wrong or like destined to fail. They were just too early. I think Trump's election, rightfully or wrongfully, was almost interpreted as like this is the legalization of crypto itself. And that creates two particular waves, although there's more eras or kind of like more elements to institutional adoption. One is let's create stable coins that are actually usable. Most of the history of USDC and USDT and even DAI has been just kind of like within the crypto native realm. But can we start integrating Tether into like payment sales and point of sales at different vendors and create use cases that like relate to payments and not just crypto trading? Another is RWAs coming on chain, which I think Jack touched on. I think like there's a lot of different, RWAs is obviously a broad category. Where things get most interesting is how do we take these largely illiquid assets and use them as a collateral basis to form new stablecoins. And that's just kind of like letting the owners of these assets get better utilization of what's otherwise illiquid. So I think although these aren't like the most sexy use cases, payments have been around a long time. they're often the most like underestimated. Most of crypto's history has been focusing on the sci-fi, like what is the 50-year vision of technology you can sell me? Mining asteroids on the moon, blocked by, or like, and getting paid in cryptocurrency, cool, I'm in. Now it's kind of like reverting from that to the super pragmatic.
Yeah, I think, as we talk more and more of institutional adoption, I think a lot of people do this mistake of just thinking too crazy, right? I think it's just more like how can we make the baseline things better using the technology, but like that will bring in so much volume of liquidity that will have a lasting impact to then facilitate other things moving forward. But when did you guys start investing in Web3? Just quickly. What was the year?
2013.
2013?
As a resale, 2016, 17.
And from a investor perspective, like 2019?
16, 17 as well, and then joined Polychain at the end of 2017.
So you guys have been investing for, in crypto a lifetime, right? And now, as we all agree, we are kind of at that breaking point of institutional adoption, right? And obviously a lot of things have changed since 13, 19, 16, right? From an investment perspective. How do you think that's going to change VC as an industry, right? Because now we're talking about different projects, now we're talking about institutions to get involved. Like, is the VC game still relevant as it is today? Do you think it is justified that investors buy in private rounds and then basically wait till TGE and when the lockup is happening? How do you think that game will go moving forward if we get more and more institutional adoption? I'd love to, Jack, your perspective on it as well.
Yeah, sure. So we've been investing from a venture standpoint since 2020 when I started the firm. Prior to that, I mentioned 2013. That's when I first bought Bitcoin, and 2017 was Ethereum, and I participated in a lot of ICOs, and that helped me find Polkadot, and that's why I joined there. So I've seen some things change. Notably, it's become much easier and well known to launch tokens, and it's been much more well known that you can start a venture fund or a hedge fund in crypto and perhaps make returns that Polychain or some of the early OG funds did. So that brought in a lot of competition in terms of, and also a lot of noise. So from that perspective, as the asset class matures, you would expect overall returns and IRRs to come down. And I think you've definitely seen that, especially with more recent vintages on the venture side, and most likely on the hedge fund side too. You've probably seen that as well. At the same time, you're seeing more scale, so people can put more money to work, and you're seeing more sophistication and professionalization around the funds, to where people aren't simply just buying and holding coins that they like, but they have all sorts of quantitative strategies around them. They have share classes denominated in other coins. The LPs are getting more sophisticated in how they prefer to pay the managers. So you're seeing just a maturation of the entire asset class. But on your question specifically around venture, it's gotten a lot harder. So the reason it's gotten harder is because I mentioned there's more competition, but then also the major stakeholders in the crypto industry have gotten a lot better at earning profits themselves. So you see exchanges, everybody, it's an open secret that a lot of projects have to pay sometimes 15% of their token day one liquid to an exchange like Binance for the distribution that Binance has, right? So that obviously is when you're a VC and typically you're locked up for 1 year at least with a 3-year vest, you're starting to look like equities, in that you wait for a company to go public from a Series A, it takes 5, 6, 7 years. Yeah. Well, similar with these damn tokens, sometimes you're in them for 6, 7 years as well. So that was very different than 2017 with ICOs, where all tokens were liquid day one, and even in 2020, 2021, which would be a reasonable vest of maybe 6 months a year. So the vesting's changed in that time period. There's kind of a gauntlet that the project has to run in terms of navigating the exchange listing fees, the market maker fees, and a whole host of costs related to integrations with stablecoins, custodians. So as a founder, you're kind of running this gauntlet, and by the end of the gauntlet, you may have a lot less tokens and a lot less capital than you think. So then when the token goes live, you're trying to secure your own treasury for the token. So all of those dynamics have added a lot of complexities and challenges for venture capitalists in the space.
Sam, I'd love to get your take.
Yeah, I think this topic comes up quite a lot, and I think there's a lot of different aspects to tackle here, but some answer your question directly, I think the VC industry will continue to persist in the foreseeable future. And the reason for that is because a couple of things. So number one, when the founder is looking to start a company, say they need funds, right? And we're starting to see this model of pseudo ICOs through kind of like these echo groups and such start to emerge, right? And I actually do believe that at some point we will have full-on ICOs again. I think regulations and government start to look at that as another possibility to actually enable something like that. But in the early, even with ICOs, in the early stages, pre-seed, when it's really starting to flesh out the company and the product, raising for VCs makes much more sense. If you raise from retail, you're going to have hundreds, thousands of people that are essentially now becoming stakeholders that are not really, number one, bought in sufficiently enough and they're not sticking to the game. And most likely they're not going to have the same level of experience, expertise, or networks or kind of value adds that really VCs can do and do help with projects. And having that many stakeholders that early can be a distraction as well. And I think a lot of founders can attest to this, right? On the other side of it, from an investment perspective, as a retail investing in early stage venture, there's a reason why it's not technically legalized. It's because the venture game is incredibly difficult. Most venture investments go to zero. That just is the fact for everyone, including myself, right? It's a power game where only a few win, and that's really what leads to these large outcomes. Retail, most of the time you don't have money to invest in 100 different projects. And a lot of time, so most times you're probably going to lose money, right? And so, which is the reason why it's technically not legalized for retail to invest in private venture opportunities. And I think we're going to say ICOs will still not be contradicting what I'm saying is that ICOs usually happen in the late stages of incoming rounds, where the product needs some payment for the project is much more well established and mature that they can issue and raise from the public at a more, de-risked state.
Yeah, I very much agree, and I think founders sometimes underestimate this. If you have good investors on the cap table, some of the introductions, some of the learnings they can give you can be very, very valuable, right? I mean, of course, yes, there's a lot of funds that talk more than they do, but overall, there are really good funds that have a track record, that have skin in the game, and they will obviously get involved a lot deeper than if you just have thousands of individuals with a 100K check each on your cap table. But yeah, appreciate the insights. Tekin, would love to get your take on this as well.
Yeah, absolutely. I think the short answer, as kind of like both panelists said, is that VC is fundamentally not going to go anywhere as an asset class and as a strategy, because there will always be new founders that want to start companies, and most of them won't be independently wealthy or rich. They'll need to raise outside money and get help along the way. However, I do think today VC is very oversaturated, and there's multiple reasons for that. I think the biggest is if you just look at previous cycles, like both 2017, 2021, there was a lot of correlation. And all you really had to do is kind of and I'm somewhat being reductionist here and oversimplifying, but if you were in the market, you made money, kind of regardless of what you allocated to. Whereas what we see in this cycle is there's a lot of decorrelation and selective winners. It's not kind of like the whole asset class and all alts pump in unison and go down in unison. It's really about select names, and that trickles through to VC funds. I think now we're going to differentiate kind of or decouple the good from the lucky, or who's a good asset manager and who just showed up. And with that, I do expect there will be fewer VC funds fundamentally and probably fewer net dollars in this space, but that's probably a good thing. I'm sure, Jack, as you have kind of a multi-strategy approach, you've seen this. There's just way too much VC funding versus liquid funding. And this creates perverse incentives in some ways because you always want to start the new protocol, but you don't want to continue to support the one that's launched. And you'll see companies launch with kind of more of a feature upgrade on a predecessor as opposed to being fundamentally a new breakthrough. So Over time, the free market will correct this, but I do think this is the era where VC desaturates.
I think you touched on a very interesting point here, right? Which is a diverse set of strategies, right? I think a lot of funds, especially in a market like this, where they realize, oh, it's not so easy. Not every good company actually brings the return or is doing well at TGE. A lot of funds are looking into OTC strategies, looking into liquid strategies, and at least allocating a portion of their AUM, the capital they have available, into different segments. So I'd love to get your guys' take. I think your guys are a lot more in a different strategies. I don't know about you guys exactly, if you guys indulge in a lot of like liquid or OTC deals, but is that something that you think is a valid strategy of changing between that, or should this be like more like, okay, I'm a venture fund, I'm a liquid fund, and that's it?
Yeah, I definitely think there is. So we launched a new hedge fund last year that was predicated on being a multi-strat fund. So we had 5 to 10 different portfolio managers at any time who all had different strategies that are relatively uncorrelated around how they make money, from funding rate arbitrage to event-based discretionary trading. So it's all sorts of stuff. And we targeted a Sharpe, we targeted a volatility measure, and there's hundreds of crypto funds doing all these quantitative strategies and arbitrage strategies and market making strategies, and it's a whole side of the business that's quite different from what we've spoken about today on terms of early stage venture seed deals. So that definitely exists. And like the deal I was mentioning earlier on 21, was one of our largest investment actually, and typically we've never even done an equity before. A week ago when that launched. So I think flexibility is a really key term. You have to be willing to utilize your crypto-based experience to go places that other people aren't necessarily looking. And to Tekin's point, there's a lot of we're starting to see a lot more compounding of winners. So something like Solana that's been around now for 5 years, it's kind of going from strength to strength. And so you're seeing less kind of new ecosystems emerge that can challenge something like that, and more people betting that the winners will basically keep winning.
Very interesting. How about you guys at Big Brain? How you guys look at this from a strategy perspective?
Yeah, so our focus, like I said, is on the stage venture, but I think there's a lot of technology as well. There's been mass amount of saturation in the VC space, and so I think a lot of funds are realizing that there are a lot of venture style opportunities within the liquid market as well. And so even though it's called a liquid investment, we treat it like a venture investment. We're looking for really undervalued projects that we think have a lot of potential to grow, and you're trying to identify mismatch and arbitrage into the liquid market. There's a ton of different opportunities. In terms of like multi-strategy, we've always considered ourselves to be quite opportunistic in the sense that crypto is really fast-paced industry. It's difficult to predetermine that these is like a single new emerging category or frontier kind of vertical. And so sometimes things emerge that you didn't or couldn't have expected, but you need to be able to think and reason about these new opportunities quickly and then invest in them quite quickly. And so as Jack mentioned, like 21 style opportunities or whatnot, I think there's a lot of stuff that's emerging within this space. Also, one last aspect is I think as crypto matures and the technology and the infrastructure is being more proven out, there's going to be more, I think, Web 2.5 style projects that are starting to come out of the space. And I think that is a very different style of investment that crypto VCs have probably looked at in the past. And it's a pretty much different way of that. What the kind of strategies to go to market and the type of teams that are needed to execute on something like that.
Could I ask a question?
Of course.
What are the examples of Web 2.5 companies that you would point to, and how can we as investors make money?
So I think a really good analogy is like, there's something that's emerging right now that is within PE, private equity firm, and it's like AI-enabled PE, right? So traditionally PE firms, they go and find old, bogged down companies that have a lot of growth. They come in and they scrap it all out and make it hyper efficient, and then they'll sell it. In the same way they use AI to make it more efficient. Again, with that analogy in mind, I think it would come into a lot of these, potentially old companies and provide a way to make their systems and products significantly more efficient. The obvious one here is around more financial companies, fintech companies. But I think going forward is like deepen frameworks and other really interesting mechanisms that crypto enables to make Web2 companies better. And again, different ways. So I think there's like the one spectrum where it's the P model, but then the early stage spectrum where you're trying to disrupt some of these old companies using like Helium is I guess not a Web 2.5, but yeah.
Sort of.
Or those public companies that just put blockchain in the name so that the stock pumps. That's another Web 2.5.
That's one way of doing it. I think for the last couple of minutes of this, of course, everybody's interested in what's a new interesting narrative verticals you guys may be looking into, and if you guys have done an investment, would love to know about it. Obviously, try to keep it short because I have one last little thing at the end before we wrap up. And yeah, take in. We just get it off.
Sure. I'll say, again, this is like an approach that makes sense in favorable monetary environments where you have no interest rates and even better like money printing and QE. But categories that are interesting are things like, I don't know, quantum compute and decentralized science and applying kind of like decentralized compute to drug discovery and some of these use cases. However, I think the overwhelming theme is this like return to pragmatism, which is this institutional adoption. So it's not a very exciting answer, but I think like new forms of payments, new stable coins, new trading venues continue probably to be the most like fundamentally defensible areas of crypto.
Have you guys done an investment in that space yet?
We're incubating something and we're paying attention to it.
Nice. So we'll hear the news hopefully soon.
Yeah.
Sam.
I think the biggest focus for us right now is decentralized AI, but that's probably something that's being talked about so much. So maybe I will cover that. I think one interesting new emerging potential is the concept of like industrial liquidity mechanisms. So taking existing industry, maybe especially commodities, taking that entire supply chain graph, and then overlaying it with DeFi style RFQ mechanisms and on-chain programmable settlement. Again, it's kind of that Web 2.5 model where you just taking the legacy industries, making it so much more efficient, and I think there's a massive amount of potential there.
Fantastic.
Yeah, for us, one recent investment was around the robotics space in terms of one of the big bottlenecks with humanoid robots is simply the episodes or tokens or the amount of data that they have. And so we invested in a company recently called Reborn that's basically aggregating data from, they're selling devices, people can wear the devices and generate data for large robotics companies like Unitree in China and others that they're doing proof of concepts with. So it's kind of a little bit like, they're calling it like embodied AI, I guess, but like, yeah, robotics is one area that we've been watching since Figure did its $40 billion round, and still very much emerging and on the fringe.
Very interesting. Yeah, I mean, you can already see from the answers you guys gave that a lot more of the companies you guys are looking at are packed to something real world, right? Robotics, stable coins, we talked about different things. A panel 4 years ago in 2020 would have been a very, very different outlook than what we've heard today. But as we probably have a lot of founders in the audience or a lot of founders at the conference as well, what's one advice you give founders that are looking to raise or launching a project in this market? Maybe just a quick answer from you guys. Maybe Jack, you can go ahead, and then we go through Sam and Tekin, and then we kind of close it out.
Yeah, I thought there was a lot of good advice on this panel. I think being deliberate about who your partners are to start, where you live, and what problem you're working on are probably the three most things, and you got to get those ones right. So pick your co-founders well, pick your city well, whether that's Dubai or New York or wherever else.
The Bahamas.
I probably wouldn't recommend you starting a startup in the Bahamas. and then obviously what problem you're working on, because there's a lot of problems that we invested in 4 or 5 years ago that didn't work, and maybe that was just a timing thing. Maybe it was simply that the tech wasn't ready, or the application wasn't ready. Real-world assets 7 years ago wouldn't have worked well before Ethereum and Solana took off. So the timing cannot be undervalued.
Fantastic. Thank you, Jack.
Yeah, I think just to be excessively customer/user focused. So I think in crypto there's been a lot of like obfuscation with and cover-ups of like how much pain a project actually has because of this overuse of like token incentive campaigns and farming and whatnot. And so I think we need to continue to iterate and actually understand your users extremely well and to develop a product that actually users want and are able to or want to pay for, rather than being always in crypto today is the user acquisition cost is always is higher than the lifetime value of that particular customer.
Thank you, Sam.
Sure. To Jack's point about what problem you want to work on as a founder, I think just being very like self-aware and sober on your decision. Avoid chasing hype. Macro trends matter, and you want to build something that has a large TAM, but also you're not just doing it because it's like the hottest thing. Usually the best outcomes are before some category or convergence of two areas of tech become topical. You're there first.
Yeah, I fully agree with all the incredible tips you guys have been giving. So yeah, it was a pleasure. We talked about the UAE. We talked a bit more about the institutional adoption. We went through some verticals, some interesting tips for founders. And of course, if you guys probably want to reach out to these guys, you might spend a bit more time here, but I appreciate you guys taking out an hour of your busy week during Token and all the other conferences that are happening to be here. And thank you so much, all of you guys in the audience, for listening in. And if you guys have any questions, happy to answer that after the panel as well. So thank you so much, and a big round of applause for our 3 amazing investors here.
Thank you.